Hello everyone. Well, the dollar lost against virtually every major currency in the world yesterday except the Russian ruble. It may be a renewed sense of confidence in the Eurozone after 2 days of better than expected data from Germany, or perhaps it's that the risk-on sentiment as equities rally around the world is depressing the dollar in general. You know, Germany's DAX as well as the Dow Jones index is now at a record high. Personally though, I wouldn't bet against the dollar right now. The debate over monetary policy in the U.S. is heating up again and is likely to be dollar bullish. Yesterday, Dallas Fed President Richard Fisher, a non-voting member of the FOMC and a well-known hawk, said the Fed was at risk of overkill with quantitative easing. And today we have two other non-voting hawks speaking, Richmond Fed President Lacker and Philadelphia Fed President Plosser, and they're likely to make similar comments. The key, though, is Chicago Fed President Charles Evans' appearance on Bloomberg TV today. He's one of the most dovish voting members of the FOMC. He said back in October that job gains in the 200,000 to 250,000 region would qualify as substantially enough to start tapering off quantitative easing. Now, it's easy to say something like that in theory, but it'll be significant if even he still thinks that way now that we are actually seeing numbers in that range. If so, then the Fed could be near to shifting its policy. Elsewhere, we have another Bank of England meeting today. Will anything come out of that? Well, the data for Britain has improved slightly recently, particularly the purchasing manager indices, although improved does encompass become less bad. And the country avoided the dreaded triple dip recession with a relatively healthy 0.3% growth in Q1 GDP. An extension to the funding for lending scheme was just announced on the 24th of April and hasn't yet had a chance to be evaluated. Not to mention, of course, that a new governor will take over at the Bank of England in July. I see little reason to expect a change in rates or in the asset purchase program target today. Sterling should be little changed as a result. Technically, cable is continuing with its consolidation, trading between 154.80 and the almost 3-month high of 156 the figure. It retraced from that level yesterday following the formation of a shooting star candlestick on the 1-hour chart as it reached overbought levels on both the RSI and the stochastics. Resistance, however, also seems to come around 155.50 with support below 154.80 and coming at 154.10. A break of the 156 the figure high may see channel resistance at 156.30 with a notable Fibonacci level coming at 156.90. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.